In the past few years, certainly I think that the shareholders have taken a bigger reduction in their returns than labor has within the business model. And that's probably that's not sustainable. That's not right.
It's not right?
Yeah, I think it's not sustainable. But I think that to the extent that if the business models can be transitioned into ones that are actually better suited for the environment, then I think we can get back to an environment where we can pay people competitively and reward the shareholders proportionally to that. But that's what we need to get to. And frankly, that's one of the things that the whole transformation of our business model is getting at, is we want to get back to a point where we can pay people competitively but also reward our shareholders proportionally to that, so that it's a reasonable it's actually a reasonable split of the economic benefits that the firm produces. Look at it at the corporate level, for instance. Look at a lot of things we've done on the compensation front. I think we've been probably the most innovative firm around aligning what our employees are getting paid with what our shareholders want and what we need to get done from a strategic point of view. A lot of very, I think, creative and very productive and very constructive stuff that we've done there. So I think that's a good example of, I don't think anybody's been anywhere close to us in terms of the innovation and the creativity that we brought to that.
Why, philosophically, are bank CEOs so vehemently opposed, or if I chose a softer word, resistant to the idea of limits on compensation?
I think our perspective is that compensation should be an issue with shareholders. I mean, it's a corporate governance issue, and so shareholders should determine how people should be paid, what structures, how much, et cetera.
The only way they can really have a say is to sell the stock.
Well, that's one way to do it, but also I can tell you these non-binding say-on-pay votes, they're important. I mean, we spend. They have definitely, so for instance, in our case, they have definitely given rise to a lot of dialogue on corporate governance with our shareholders and around compensation as well. So, they may be non-binding, but they're still very important. But even before that, we obviously care a lot about how our shareholders think about how we're running the company. But it is an industry where this question of the cost of our people, it's a really important input to the business. I mean, it's like
Single biggest cost.
It's one of our biggest costs, absolutely. There is a market there. I mean, we can't just determine how much we pay for labor. It is a market. I mean, it'd be like going to, going to Walmart and saying, we think you should go and pay all of your suppliers 25% less because we think you're just paying too much to your suppliers. Well, they'd say, well, that's crazy. I mean, I have to pay what I have to pay to get the products in the door, and that's what I have to. That's the market. That's what I mean. And it's a similar thing now. So it's a very important factor of production, and so it's actually something that's critical to us to get right. Now, having said that, there have been a lot of I think irresponsible structures and approaches to it. So I do think that there is a lot of room for doing it better.